Hi, guys. Welcome to our first show. My name is Tyler, and I'm with Matt, the founder of ORATS. ORATS is an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. And since we have lots of stocks reporting earnings this week, we're going to focus this episode on scanning for earnings trades and then doing some analysis and then finally sending a trade through. Matt, if you're ready, do you want to share your screen and take us through the dashboard?
Sure. Thanks, Tyler. All this beauty of our dashboard product, that is our front-facing platform. A lot of it is designed by Tyler, so thank you, Tyler. We're built on our APIs and our data. So a little background of ORATS is we've been around for 20 years. Before that, 10 years, I had a market making firm. And so we developed many of these proprietary calculations. So our mission is to give our users this institutional quality data and easy to implement and trade well. So we have back testers, we have scanners, we have research, we have a bunch of things. But today, as Tyler said, we're going to focus on earnings. We're right in the middle of the season, and we have some pretty exciting ways to identify stocks that we've developed over the years. So let's hop into that. So this is our option scanner, and the option scanner works. I could clear out everything, and I can find ways to add symbols. Right now, I have symbols coming in. You could see here, Walmart is one of them. It's coming from a stock scanner. So we'll show you that real quick right now. So here's how the stock scanner is set up. So I've set up I just named it an earnings prediction for selling. This is going to be a selling earnings prediction. So I've come up with a filtering system that identifies these types of stocks. So we have a forecasted earnings effect, and we have an implied earnings move, and then I have some liquidity constraints here. So that stock has to be over 25, minimum 25. The implied volatility has to be between 10 and 100. Weeks to next earnings is 0, so that's going to be earnings this week. And the average option volume for a particular stock is 1,000. So that's pretty high. But we have 17 stocks that this is identified. AMAT, BABA, and you could go through. We could click on any of these ones and see a history, but this is where the stocks come from. So now I want to go back to the option scanner and get a little bit lower and say, okay, well, here are some, since I've identified stocks I want to sell. I think the earnings estimation is too high in the market. I want to go in and find strategies that might make sense if the stock doesn't move as much as the market thinks right now. So I could sell a put spread, so getting a credit for that. I could sell a call spread, getting a credit for that. Or I could buy a calendar, and we'll look at the payout pictures of calendars. These are favorites of many of the earnings gurus. So long call calendar, long put calendar, and an iron condor. Iron condor, and we spell it out here. We buy an out of the money call. We sell and closer to the money call, sell it closer to the money put, buy an out of the money put. There's a condor. So, and we have these deltas that you can adjust. I've already adjusted these. The call that we're buying is going to be a 2 to 25 delta. The call that we're selling 15 to 45, etc. So all these you could set up, and there's in our scanner, there's quite a bit of information that you could use. Same with the put spreads and calendars. You could set up all this information. A calendar is when you buy a call or put in the longer month. So our days to expiration is somewhere around 30. We're selling around a 14. we set a minimum 2 days to 18 days. Of course, these are all adjustable. And if you would change these, you would change the results below. The delta is pretty near the market for this. If we were looking for a calendar for something that moved more, we'd have lower deltas. So we want a calendar to land right near where we set our strikes. You can see our little icon. The green is very small there, but the green, and I'll click on one here, as a matter of fact. So the green is the profitable area, and you can see in the payout picture below here where the profit's going to be. Now, it's not going to be that high, and you're not going to be shooting for this to finish right at this particular point. A calendar has some volatility to it. So there's Vega. You could see in this, there's a graph of the Vega. So as you get closer to the money, the Vega is higher. So I don't know if you could see that. There is a mark. So the Vega is at the money is 6.5, and then in my cursor that's moving is showing what the Vega is at various prices. So you can see what your Vega is. So the Vega, tends to be pumped up in around earnings. So we could visualize that. So I could now look for PANW. I could show you what that looks like. So by going to the trade builder, so the trade builder shows more information on this particular stock, and we could see this is pretty typical. So this, what we're looking at is the trade builder here. So I like to look at this to see the stock price movement and to see what our valuation matrix is, and also to see the at the money volatility. So I think it presents kind of everything you need to do to make a trade, or at least the things that I like to look at. So this blue line is implied volatility. And typically what happens with implied volatility is that it goes up right before earnings and then crashes down. That's the vol crush, or people call it various things. But you can see in this particular stock that the volatility has come up pretty highly, and that the front months are much higher than the back months. And that's why that's why our scanner has chosen this particular stock, is because what happens when these are so high, the implied earnings moves high. And so that's what we've identified through scanning through the hundreds of stocks that are reporting, as this being one that might be a little bit overcooked. So we would sell the front and buy the back. In this particular case, it's pretty tight. We're selling the Nove 17s and buying the Nove 24. So when I'm mousing over, I can see these dates. So this is a visual. I could get a visual of what this Palo Alto networks, and we describe what is going on here. It says when the earnings are. So earnings are still 2 days out after the half moon after icon on the 15th. So this is what I look at, and these vertical arrows, red arrows, are what the insiders are doing. So there's a lot of sellers here and just a couple of small buyers. So that's our trade builder. So now we could go back to the option scanner, and now I'll kind of go over what our trade analysis looks like. So the legs is selling the front, the 257 strike, which is close to the money. 256 is the stock, and we're buying the farther out 1 week later, same strike, and then we show what the prices are, and then we show something called SMV. SMV is our smooth market values. This is a really important concept because you can see that we have it worth 67 cents. The mid price is 65 cents. So you really want to concentrate on a relative theoretical value here. And I'll show you how we calculate that. So we'll go over to the options chain. And the options chain, it shows a good, graphs the SMV, which is the smooth market value. And the smooth market value, if we look at this options chain, the smooth market value is derived from the orange lines that go through the strikes here. So this is drawing, this smooth line, and so this develops a smooth price, a smooth options price. And so what you'll see is these dots. So the cayenne are the call implieds, and the P for purple are the puts. And so they're going to be different implied volatilities, but we're going to try to draw a smooth line through it. And what that will give us, and if you open up one of these expirations, you could see that there's an SMV value. So the SMV value for many of Apple options are pretty close to the market. But when you have a less liquid type of a stock, the smooth markets become more important. But generally, they're within the bid and ask over 95% of the time. So we like to look at, let me pull up my sell earnings. And so we like to look at a smooth market value that's in our favor. So we want to get as many things in our favor as possible. And you could see here that I've set an SMV lower than 3% and -3 are cut off, and above 3. So we want something kind of fairly valued here. So we don't want too much edge, because what's going to happen if you're looking for stocks with too much edge, usually what will happen is you won't get filled, because market makers understand this concept of a smooth market value. Our forecast value, we do forecasts of future earnings. And what we're seeing here is that there's a large amount of edge in there for the forecast value, and that's one of the reasons that we've identified these Palo Alto networks as a candidate for this particular scan. So let's take a look at, again, so the smooth market value in this case is 68 cents. We'd be buying it for 65 cents. So that's in our favor. So there's some edge there. And you can see that the distribution edge, which I should explain that briefly. So a distribution edge is based on a expected value where we multiply all these nodes. So this looks like a normal distribution. So we multiply the percent chance of hitting each one of these nodes by the terminal value, or the payout picture, what the value is at that particular point. And so what happens is, at that particular point, we'll just add all these together, come up with a expected value. Well, this particular distribution isn't wide enough, or that's why, or it isn't volatile enough, because we have it worth 268, so it's $2. It doesn't see the big earnings move that's expected in the stock, but the forecast edge does. It actually has a forecast of earnings, but it's much lower. So this is, again, one of the reasons that we like this particular stock. And you can see the SMV is now 67, so 65. So what we would do here is, we like this trade. We have paper trading. We also have a Tradier endpoint here, but for this purpose, we'll go into the paper trade. We can copy this trade and save it for later, or share it. But in this case, we'll review this order at 65 cents. If we have more quantity, if we have 2 lot, then it's double that. And we could then, in this case, you could see the payout picture changing. So now the max loss is 260. We're paying 260. Well, now it's 270 is the mid price. So we'll do a 5 lot, $340. Again, the market's pretty wide here, so the theoretical is still quite, or it's still a penny above. So maybe we'll click this up to 72 cents to try to get filled. We'll confirm and send this, and then go over to our working orders, and you can see the working orders here. And then we'll wait to see if that particular order was filled. So we could see that was filled here. We could see it in our positions. We have now, this is our positions. tab. As you saw, we have filled orders, working orders, and we have exit alerts. So I'm going to set those up right now. So the cost of this particular trade was 72 cents. As you recall, we paid up a little bit. It shows the mark, and so we're down $22 on this 5 lot. And so what I want to do now is I want to say, well, give me an alert. So the alerts are, there are many different types of alerts. So I want you to warn me if the profit and loss is above a certain amount. So in this particular case, I want to get a little more than 50%. So I want to get 75%. If I want to add alert, another trade alert, I want to do it. I also want them to tell me if it goes below maybe 50%, so negative 50. So we're losing 50.
Yeah, that would be a stop loss.
Yeah, that would be a stop loss alert. And then I could also make a note here. I could note, this was on the Tradier hub. And then I want to add one more alert. I want to add an alert. So there's many different types of profit and loss. You could say price or whatever like that. So I wanted to show that. But I could add an alert that's an event alert, like an earnings event. So I want to know, alert me one day after earnings, so I could go in. You think you remember, but you don't always remember these. So now I'm going to submit these changes. And you might notice that an A came up over here. And then it has all of our alerts here. So that's really neat. I get a text now if those things happen. And you can see now that it's gone from 68 down $22 to now down $10. So we're often running on this particular exit alert, and we have a list of exit alerts over here that show what's going on. And so now you're in. We've gone through, the process of how I like to find trades around earnings. So just to review, we went into the stock scanner. We save these particular templates or scans. This one had a forecast earnings effect, and I could sort on that. So when I sort on that and I send it over to the option scanner, it sends that the top 25 is what you're limited to in this particular one. So we came up with this sort. We have many templates as well that we send with preloaded with the dashboard product, and then we went over to the option scanner, of course, and then we added that stock scan, and then we found particular option strategies that would benefit from the earnings move being overvalued. And then we went in, found the best trades, and clicked on those, and we checked out the payoffs. We checked out what all the distribution, the max gain, max loss, reward to risk, all that information you could review in there. Probability of profit is quite high for this. Again, it's not going to be quite as high. When the volatility comes down, we could adjust the volatility. We could see what would happen if if volatility comes down, or if the days go out. What the theoretical, how that's going to affect the theoretical payout picture here. So that's what I had to say today for the process of finding an earnings trade. You could use this for other types of trades as well. This one particular one, since we're in the middle of our earnings, I thought I'd go in, use my favorite indicators, find the stocks, look at and then have our database scan through millions of trades to find the best ones that match that, and come up with what I think is a pretty solid trade. So of course anything can happen in Palo Alto, but we're hoping that it stays between a certain amount. We also have some analysis that we could look at for Palo Alto's prior experience or earnings history. So what we're looking at here is in the earnings tab, these are all, this shaded area is what the implied earnings move has been for Palo Alto. So that, and then the actual moves is the solid dot beneath that. So the average solid dot is 8.3. Today we are implied at an 8.0. So that's this purple shaded area. And there's no dot there because we haven't moved yet. So we hope the move it comes somewhere near the money, but that remains to be seen. I've back tested this approach, and the way I back test it is I go into our API, pull out all the earnings companies, and look for the ratio of the highest ones, and then the ratio of the lowest ones of that forecast divided by implied. And I've done that for the past 5 earnings, and there's quite a big discrepancy between how much stocks have actually moved versus how much they were implied to move. And so what we're trying to do is have the buys move a lot and the sells not move very much. And that's what this particular scan do. Of course, anything could happen for in Palo Alto. What you want to do, I think, in earnings is have a very small amount and many more trades. It is kind of a binary event, but you want to put as much in your favor as possible. So if you could put on a bunch of smaller trades, then you could start to get that back test that I did in your favor, and make some money on earnings. So Tyler, that's all I have. Did I miss anything, or should I emphasize anything, or how are we doing?
Yeah, that was great. Could you go back to the stock scanner pretty quickly? I want to go over some of the indicators that we use in the stock scanner, and how to filter down all these stocks reporting earnings, because I think there's several hundred of them. Matt, do you want to go over some of the the preset indicators? If you click on the earnings tab right there,
Right.
you go over some of the different ones you can filter on and then sort on, and how you do that.
Right. So, the one that I've chosen in this particular one is the weeks until earnings. So that's, you could click on any one there. So that's, we want earnings this week. And you could look at other, the past earnings moves, what the earnings straddle percent was. You could do ratios of these two. But the one that I've tested is the applied earnings move divided by the regular earnings move. So the way to construct these ratios is to go in and add a custom indicator. So I add a ratio, and then you could see that we have 700 indicators that you can make ratios from. So I'm going to put implied earnings move, and also show we have an indicators tab. So, there's a lot of indicators out there. So this is a good way to find the indicators to use for this. So this is one way that most people search for earnings. And then we have our own specialized way. So what I'm kind of doing here, it's an interesting thing, is I'm using what I think is a more effective way, to find earnings versus the way that I think most people use the calculation that most people use. And I'll just explain briefly. So what you want to do when you're looking for an implied earnings move is you want to be able to take out the what's going to be left over after earnings. So what we've done is we've tested hundreds of thousands of earnings, come up with a distribution, come up with what we think the value of the straddle will be after earnings. So you need a distribution, and then you need what implied volatility is going to fall to. So this is how we calculate, the ORATS implied earnings move. The old standard earnings move is what most people use, and that's just looking at a straddle and taking that percentage as what it's going to move. So we want to see the difference in that, because we think that that's where the alpha is. So that's why that's one of the ratios in here. And you can see that I have set that to 1.8 max for this particular scan. So Tyler, anything else that you want me to point out in the dashboard?
Yeah, no, that's good. That's a quick overview of our stock scanner. Like Matt said, you can build pretty much any custom indicator, any ratio, and we have a lot of proprietary indicators that we calculate from earnings, from volatility, a lot of that stuff. And jumping from the stock scanner to the option scanner is a great way to look at all those stocks combined and then filter through millions of trades, sort on our theoretical values, and then find the best one. And we're connected to Tradier, so you can send that through to your brokerage, and it's a really seamless way to do that from ORATS to Tradier without leaving the ORATS dashboard. There's a lot of other ways to, a lot of other things in the dashboard we haven't touched on yet, but we're about out of time. So, we'll touch on those next week. We got back testing, market intelligence, trade ideas to go over. But that was a quick overview of our scanners. You got anything else, Matt?